Hi everyone. So there's an FPO, that is follow-up public offer of Ruchi Soya starting 24th March, where Ruchi Soya, which is owned by Patanjali Group, is raising 4,300 crore rupees. Please note that Ruchi Soya is already a listed company, but here the company is diluting its shareholding and raising capital. Now Ruchi Soya has a long history. In fact, it got delisted from exchanges in 2017. And what happened next is crazy. It got relisted and the share price zoomed 100 times within the next few months. But why? What was so special about Ruchi Soya that resulted in 100 times jump in its share price? And what is the role of Patanjali? We'll discuss it in this video. The reason for this video is to make sure that you know the detailed story of Ruchi Soya. This can be a case study of how Patanjali found loopholes in the Indian stock market system and created a fortune out of it. In this process, did they turn around Ruchi Soya from bankruptcy to profitability? Well, let's have a look. So just to give you a quick introduction, Ruchi Soya is basically a manufacturer of edible oils. It began its operation in 1986. However, starting 2010, Ruchi Soya went into trouble and its debt levels started to jump. It eventually reached a point in 2017 where the debt reached a level of around 12,000 crore rupees. Eventually, Ruchi Soya failed to repay its debt and a case under the Insolvency and Bankruptcy Code was filed against it in 2017. Although it did not find any buyer till 2019. In 2019, Ruchi Soya managed to get two bidders, Adani Wilmar and Patanjali. Now nobody would be interested in a company that has huge debts, right? So before Ruchi Soya was listed for sale, various banks had written off the debts to almost half. For example, SBI Bank wrote off its debt from 1800 crore to around 880 crores. Basically, various banks took the hit by writing off almost half of the loan. Now interestingly, Adani Wilmar withdrew its bid and only Patanjali was left to buy Ruchi Soya. So Patanjali acquired Ruchi Soya for around 4,350 crore, out of which it took a loan worth around 3,250 crore including loan from SBI Bank. So the same bank that wrote off almost 900 crore of bad loan of Ruchi Soya agreed to give a loan to Patanjali for acquiring Ruchi Soya. Quite interesting. By the way, there is nothing illegal here. But in this process, investors who were holding 100 shares of Ruchi Soya before the delisting were left with only one share as its share price was diluted in the ratio of 100:1. So Ruchi Soya was last traded at around 350 rupee at the time of delisting. But after the share dilution, the value of one share of Ruchi Soya became 3.5 rupee. Now what happened next was crazy. Ruchi Soya got relisted in January 2020 at rupees 16 and within next 5 months, the share was trading at rupees 1500. Almost 100 times jumps within 5 months. How is that even possible? So the reason is that when Ruchi Soya was relisted, Patanjali owned 99% shareholding in the company. So only 1% was owned by others. This resulted in a huge supply-demand gap. Since 99% of Ruchi Soya shares were with Patanjali, there was hardly any supply for the share. And due to very low supply of shares against the demand, Ruchi Soya share jumped almost 100 times within the next few months. In fact, the share was locked in upper circuit for almost many days. And then in the next 3 months, the share price tanked around 70% as the share was then locked in for lower circuit. And that is the reason liquidity is very important. Let me show you its share price movement. Now if you look at Ruchi Soya share price movement, you can see that it was trading at levels of around 21 in February 21, but then it was locked in upper circuit on every single day and it touched a level of 673 in May 2020. But then there was slight fall, but again there was an upper circuit till it touched the level of 1500 by June 2020. So during this period of February till your June 2020, the share price jumped 6,951%. But then Ruchi Soya was locked in lower circuit for continuous period and the share price fell down from highs of 1500 to almost 70%. From there, the share price is still up almost 99%. Although it touched a high of around 1242 in June 21, but since then the share is down around 28%. Now the question is, why did SEBI allow Ruchi Soya to be listed with 99% holding from Patanjali? Isn't there a limit on promoter holding and public holding? So generally when the company go for listing, promoters dilute some shareholding for the public and DIs and FIIs. But in this case, Patanjali listed the shares with 99% shareholding. Now, why SEBI allowed Patanjali to be listed with 99% holding is a separate question altogether. Maybe political pressure or something else. But before listing, SEBI ordered Patanjali to reduce shareholding from Ruchi Soya to 75% within the next 3 years. And that is the reason Patanjali has now come up with this FPO of Ruchi Soya to raise money that would be used to repay the debt, where it's diluting its shareholding by another 20%. So basically its shareholding would fall from 99% to around 80%. So in this entire process, the initial shareholder of Ruchi Soya at the time of delisting got only 1 share against 100 shares they held, which means they lost 99% of the value. The banks lost crores of rupees in bad debt, and Patanjali acquired Ruchi Soya for 4,300 crore, that too by taking loan from banks that had earlier written off the debt on Ruchi Soya. And in this entire process, the valuation of Ruchi Soya jumped from 4,300 crore to levels of rupees 23,500 crore. So at the time of FPO, Ruchi Soya is valued at 23,500 crore, where the public will again invest in its FPO to help Ruchi Soya raise 4,300 crore. And remember that out of rupees 23,500 crore valuation, only 1,000 crore was invested by Patanjali out of its own pocket. Rest was loan from banks. So rupees 1,000 crore invested in Ruchi Soya in 2019 by Patanjali is now valued at rupees 23,500 crore at the time of FPO. And the total amount of rupees 4,300 crore that Patanjali invested in Ruchi Soya in 2019 would be paid back by the public in this FPO. So after FPO, Patanjali would hold around 80% shareholding in Ruchi Soya with zero investment, valued at 23,500 crore. Well, would you call it a turnaround story or a crony capitalism? I would let you decide. By the way, as far as the turnaround story is concerned, the financials does look much better. Let's have a look at the financials of Ruchi Soya. So if you look at the financials of Ruchi Soya, if you look at the profit and loss statement, you can see that it was in huge losses operationally, loss of 675 crore, then 5,000 crore in March 17 and 18. And you can see here it was also making net losses again consistently in 17, 18 and 16. But then there was turnaround, and you can see that it made a profit of 126 crore, then 406 crore, then 957 and 1333. This is operating profit. And at net profit level, it increased from 77. You just ignore this field. Then the profit is 681 crore and then 886 crore. So this is basically due to its other income of one time. And then if you look at the quarterly performance in last few quarters, the revenue size, it has increased from 3,900 to 4,000, then 4,800, 5,000. So there is a good increase in quarterly revenue. And in terms of operating profit, it has increased from 239 to 341, then fall of 250, then 331, then 330 and currently 420. And in terms of net profit also, there's an increase from minus 41 crore to 12 crore, 127, 227 crore, then 314 and currently at 234 crore. And if you look at the shareholding pattern, its promoter Patanjali Group holds around 99% shareholding in March 20 and currently it is 98.9%, and remaining public hold 1.1%. You can see that DIs and government doesn't hold any shareholding in Ruchi Soya holding. So Ruchi Soya, which was making huge losses in the past, has reported a profit of 886 crore in trailing 12 months. But you can't always trust the numbers. We have seen cases in the past where the numbers have been manipulated. In terms of branding, Ruchi Soya is investing in its brand building of Nutrela, where it is offering various products under this brand Nutrela, including your Nutrela soya food, Nutrela atta, Nutrela honey, Nutrela oil and so on. Now, will Patanjali be really able to turn around Ruchi Soya is something that we don't know currently, but that is something that is only going to know in the future. But as far as this FPO is concerned, I am out, as I don't like to invest in companies that are highly manipulative. It might be a turnaround story in the future, but there are already great companies with clean balance sheets and great leadership to invest my money. So I would give this FPO a miss. Now tell me, what do you think about this story of Ruchi Soya? A turnaround story or a crony capitalism? By the way, please note that this video is not politically motivated. I only look at the business. So kindly refrain from posting political comments. I hope you will find this video useful. I'll see you in the next video. Till then, take care.